those cues. Well, let's focus on Laurus Laboratories. Well, they reported a rather disappointing set of numbers. It was a top-down miss, and the numbers came in yesterday. The stock did see some bit of selling. The margins came in at lows that we've seen in the last many quarters at around 20%. But to understand what's the view and how things move from here on, we're joined by Dr. Satyanarayana Chava, the founder and CEO at Laurus Labs. Hi, Dr. Chava. Good morning. Thanks so much for joining in. Well, you have spoken about FY24 as being the year of consolidation. What's the likelihood of you seeing a bit of a degrowth? Is there any possibility, or do you believe it'll be a flattish to a positive year in terms of revenues? And what about margins? Have they bottomed out at around 20 to 21%? Then what's the scope of improvement from here?
Good morning. The FY24 is going to be a consolidation year for us. What it means, we don't expect any degrowth. And the margins, what we declared in the Q4 FY23 were at 21%, was the lowest the last 3 years. Now, that was primarily because of severe price pressure in ARV, APIs, and formulations. The second, we have created huge capacity in the APIs and formulations in anticipation of commencement of contract manufacturing of formulations to European customer, and also manufacturing of clinical phase products for big pharma. All those capacities had a lot of deleverage because of operating expenses. That was the main reason for a low EBITDA margins in Q4. We believe that was a bottomed out of the number for margins, and we expect margins will improve year onwards.
You had said that at the end of the third quarter, you had said that margins will be will improve in FY24. You said that full year margins will be 28%, and FY24 margins will be an improvement on that. I mean, as you stand at the end of the fourth quarter, would you want to update that guidance?
We are not giving any guidance on our revenue or EBITDA numbers quantitative. We can only give you qualitative guidance. The reason for significant drop in our EBITDA numbers in Q4, as I explained, primarily led by disruptive pricing.
Dr. Chava, we got that. But since you already put out some sort of a guidance out there after the end of the third quarter, given what you have reported, could you give us a broad way to think about what margins, maybe a band, what you see them in FY24?
See, currently, if you look at our FY23 margins were at 26%. And by the end of FY24, we expect margins will reach more closer to 25%. And we need one more year. To go back to our aspirational EBITDA of 30%. We will get that by FY25.
Okay, so at FY24, 25%, and FY25, you're saying aspiration is to by the end of FY25 to 30%.
30%.
Okay.
Okay, so in 2 years,
why we are saying we have a good visibility what we are doing and what product we are doing and to whom we are selling at what price. The uncertainties of FY23 of large order from big pharma is over, and we are commissioning a lot of capacities in a phased manner. Animal health revenues will kick in second half of this year, and several clinical phase programs will be supplied starting from Q2 onwards. So the confidence level on FY24 is very high right now.
You're saying by Q4 FY24, margins could go up to 25%.
You're right.
Okay. Got that. So just if you could break up your top line guidance in terms of individual segments, what are you baking by way of growth in the CDMO synthesis or no growth in the API sales in ARV? Could you give us, when you arrived at your guidance figure for the full year on the top line, what are you expecting in the individual segments?
We expect our efforts towards stabilizing ARV, APIs and formulations will give benefit from Q2 onwards. We have taken process efficiency improvements as well as purchasing efficiency, manufacturing efficiency, all those will kick in Q2 onwards. So the margin pressure, what we had experienced in Q3, Q4, and partly in Q1 will wane off in Q2 onwards. So the API business sales will improve, margins will improve, and the formulation sales in US and Canada will also improve margin. So the overall margins are driven by ARV APIs and other APIs. Those are seeing positive trends beginning of this Q1. And because of high base of CDMO last year, close to 2150 crores. So we expect some decline in synthesis sales, CDMO sales, but we are very bullish on that segment because we have signed many clinical phase programs with several big pharma, and those will supply initial quantities in this financial year and maybe significant quantities in the
So what could be the expected decline in the synthesis CDMO sales in FY24?
It's not very significant, I want to tell you. We can't give a number, but it is not very significant.
So in single digits, mid-single digits?
Yeah, we'll give you the more guidance at a later date. Want you to communicate. See, when we are saying it's a consolidation year, we don't expect anything of the total.
Right, Dr. Chava, to be quite careful about these guidance numbers, right? Last year you had a bit of a hiccup with regard to the $1 billion revenue, then 6,500, then it came in even lower. But we get it. This is a year of consolidation, so flat on the top line. But for FY25, you're saying you want margins to go back towards that 30% odd mark. What about for FY25? What kind of a growth can you see? You'll have 2 lull years. So for FY25, what kind of a growth do you think? 10 to 20%, 20 to 30%, you're talking about as is your mix changing. So margins we have, what kind of growth?
See, if you look at our EBITDA number, we did close to 600 crores, 1,594 crores for FY. And that was at 26% EBITDA. So we expect the EBITDA numbers will be...
No, the EBITDA, Dr. Chava, EBITDA number we have, what kind of a growth will you look at for FY25?
I can say we will see good growth. I can't give you any guidance right now.
Good will be 10 to 20 or 20 to 30. What can it be? Because you're going to give a year of flat revenues.
No, we have to take care of a section of people who ask absolute guidance and another section of people who want us not to give any guidance. So we will be very cautious in giving any guidance. No, but our numbers should speak. So we can say we have more confidence on our business right now than last year. Last year we did grow from the previous year. It's not that we haven't any growth, but the year we have a lot of confidence on many customers and many projects what we are handling right now. And we are ready to take opportunities because we added significant capacities in both API and formulations.
Dr. Chava, you said that on revenues, you will see growth, not a degrowth. At net earnings level, I mean, if you look at estimates from analysts who track your company, they're factoring in, a meaningful sort of degrowth, 24 over 23. What should we expect?
I don't want to comment on the analyst reports right now.
Okay.
So they are free to provide their views, absolutely. I don't want to comment on those.
Very quickly, sir, what can you guide on the debt front?
See, if you look at the overall debt was a little less than 2,000 crores, we expect to maintain at similar levels. Despite of our huge capex, what we intend to do in FY24, we expect the similar debt levels.
What is the capex in FY24?
FY23 we did 990 crores, and FY24 we expect to do close to 900 crores capex.
All right, Dr. Chava, we'll leave it there. Thank you very much for your time, and we hope to speak with you again on some of the numbers that you've provided, and of course overall business.